Greed is right. Greed works.
Hello everyone, and welcome to episode 19 of Let's Play Wall Street Raider. I'm RakeM, your host, and today is the first episode in quite a while, I think since episode 11, that we don't have a to-do list to hit before we start the episode. We finally have all of our stocks performing the way we want them to. We've pretty much got them dialed in, and most of them are making a profit. I think there's one or two that we added recently that are still getting fine-tuned, but for the most part, we don't have to make any major changes, and we can actually get some decent game time in this episode. Before we go any further, let's recap where we are with our commodities. But first I have to select me. We currently have commodities or futures in gold and corn. Corn we sold short. It went all the way down to $5 and now it's on its way back up. So I'm going to go ahead and cover it. And the way that corn, as volatile as corn has been, I think what my plan is for right now, at least until that volatility ends, is we're going to buy and sell it a lot. Very short term for very small gains each time, because it seems to go down to 5, back to 10, down to 5, back to 10. And as long as we're paying attention, and I think we can pay attention now that we don't have to massage our stocks all the time. Every time this goes up to $2 either way, we'll sell it, buy it, sell it, buy it, sell it, buy it. So we can make a good amount of money if we just keep our eyes on this. Alright, so I'm going to go ahead and cover my positions in corn. And the other thing is that wheat is at the highest point it's ever been. So as soon as I finish this, I'm going to sell short wheat. And anytime corn gets up to $9 or down to $5, we're going to buy it and then sell it in the $7 range. Okay, so let's sell short some wheat. Oops, that's the wrong button. All right, I'll fast forward real quick while I do this. I think that's 5, but let's just make sure. Yeah. Okay. So last episode we got a couple of batches of good news. First was that the trade war was ending. So the stock index is up 2,000 points. We also were told that the interest rate was going to come down, that the interest rate or the money lending policy, whatever the Fed rate, was easing. And so, as a result, gold has risen 200 points. And on top of that, we expect that the GDP growth rate should finally start to grow. So, all of our companies are now earning money. We've got them set up to earn dividends. We restructured all the ones that I held directly to put them under an insurance company so that they could declare dividends, because apparently that has a beneficial effect on your stock price. So where we are now is we are basically just watching the earnings report of each company as it comes up. And when they do, we'll go to each company, we'll pay down their loan if they have excess cash, and we will make any adjustments that we think need to be done. But for the ones whose income has gone up and they're projected to continue to go up, there's probably nothing else that needs to be done. So what I'm going to do is I'm going to fast forward. I'm going to turn on the ticker and I'm going to fast forward through all the ones that I don't have anything to explain. So the earnings reports will come up, and if there's something to be done, then I will come back and talk about it. But otherwise, I'm just going to fast forward And if you want to watch it at regular speed, just use your YouTube settings to watch the video at half speed during those portions, and it'll go like regular speed in a normal episode. Okay? So I'm primarily going to just deal with the debt of the companies whose earnings are improving, and keep an eye on the commodity price for corn. And then if there's anything to talk about with the stocks, I'll stop fast forwarding and I'll come back and we'll talk about it. Alright, so without further ado, let's go ahead and turn on the ticker. And first one up is Burger King. And just an example of what I'm going to do. His earnings last quarter were 42 cents. His earnings this quarter is 62 cents. So I go to Burger King. He has excess cash. His bank rate is 11% and his bonds are 7.35. So I'm just going to pay it toward the loan. Okay. He made 62 cents and he's projected to make 82. So I'm not even going to bother to look at the industry. He's doing just fine. I don't need to mess with him. Okay. So that's what I'm going to do for each company. If one of the companies comes up that the earnings are down or something needs to be done, then I'll stop fast forwarding, come back and talk about what I'm doing. Other than that, I'll be keeping an eye on the commodities here. And that's pretty much it. So I'm going to fast forward now and I'll come back when there's something to talk about. And wouldn't you know, the very next one that comes up, I need to talk about it. So we're making money with MGM Grand, and he's got a growth rate of negative 8%. So I want to go see if we can raise our growth rate. The industry's growing at negative 5, and I believe we froze everyone's loan. No, we didn't. All right. And we've just taken control of Prime Hospitality. So let's take a look at what we can do here. Hilton's not frozen. What about Maristar? Is he frozen? No. Alright, so what I want to do is I want to freeze all the loans here. I know they're all growing, or a lot of them are growing negative. So it won't have an effect on some of these, but the primary one is Hilton, Maristar, and Circus. And we could freeze his also, but he's a minor factor, so it's not going to affect us as much. So Hilton, Maristar, and Circus we're going to freeze. Alright, so Circus is first. Hilton. And Maristar. Alright, so those three are frozen. And I want to go ahead and up our growth rate to about 5%. 1/4 of this pre-tax return. And then we need to check on our management and see if we need to change our R&D. This is for the bank. We don't want to do it for the bank. We want to do it for MGM. Growth rate 5%. Okay, our management is very capable. So let's back off on our R&D to 6%. And let's check and see if we have a dividend. $0.38, which is perfect. Wow, his stock price is really high. Let's see. MGM. Our goal is 377. We must have really overpaid for him. Okay, so MGM's here. We paid 37 billion for him. All right, and 500. So I guess that's right. It's going to take us a while to get there. Because, I mean, that's 10 times his value. So basically what I'm saying is we'll probably have to double his net worth before we'll get, 5 times our 37 billion back. But, that's okay. That means it'll take about 4 years, I think, before we can sell him. But you never know. It's 10 times your net price as a stock price. That's been known to happen. All right, so that's all we're going to do for him. And we're going to go back to fast forwarding again. I'll come back when there's something to talk about. On Southern California Edison, he's making a decent return after losing money for a while, but his management's mediocre, and I noticed that our R&D is set to 3%. So I'm going to leave his growth rate at -7 for right now, but I want to increase his his R&D to 9% and get him out of the basement. All right, so I've already paid back his loan, and he has a dividend. So I just want to increase his R&D, and we're going to increase it actually to 12%. And that'll get rid of pretty much all of his pre-tax return. But if we increase our management rating, we'll get all of it back and more. So I'm going to leave it at 12% for the next quarter, to see what we can do about that. So, all right, let's go back to fast forwarding. Keep an eye on the price for corn. STI has achieved very capable status, so I want to back down his R&D or advertising spending to 5%. And I also want to look at whether we want to buy any consumer loans or invest anything of this $1 trillion here somewhere. So let's see if there's any business loans to be bought. Okay, so let's buy these. Okay, and now let's put another 100 billion in each one of these. Okay, that's it. That's all I want to do. Zurich Life was the insurance company that we bought last episode, and we put all of my stocks into it. And it occurs to me we never did make any adjustments to its management. So first thing is he's very incompetent, so we need to raise his R&D to 7. He doesn't need insurance reserves anymore, so let's change his growth rate to negative 1%. And 0 on the dividend is fine because I own him and I don't want dividends to come to me. But let's also buy back his bonds. So let's take care of all of that. Okay, now let's change his growth rate to negative 1. And his R&D to 7. Okay. So Irish Life made a bunch of money on his interest rate swaps. That's actually for next quarter, I think. Let's look at this one. So he earned, there it is, $369 billion. After taxes, $258 billion. All right, so I don't know if, okay, he's got the right bank. All right, so let's do an extraordinary dividend and give that cash to the bank. Is that what I want to do? Yeah, that's what I want to do. So we'll do an extraordinary dividend. And it's not going to let us do it for the full amount. Matter of fact, that's a pretty small amount compared to what we have. Let's split him. We're going to have to split him a lot. Alright, our projected income is $430, and pretty much all of our stuff is cash. I think maybe the only way to get that out then is to do a regular dividend. $2.01 is our max. So let's go ahead and set that. Alright, so I guess we need to figure out what to do with this money. We can buy mortgages, we can buy government bonds. Let's see what the government bonds are trading at. Yeah, they're above their par value. And so's this one. So I don't like that idea. What about corporate bonds? I know there aren't a lot of them to be had, but let's see. This must be a new issue, but he's above 100, so I'm not crazy about it. really much to be had here. Not unless I want to buy junk bonds and then buy a bank and turn them around. And I don't want to spend $16 billion on a bank that's going to go broke, so I guess we'll just hang on to the cash. The only other thing to do would be to have the bank give Irish Life and Perm these other stocks, A&P, Alcoa, etc., etc. But we'll leave it like this for now. We'll just stockpile the cash, I guess, for the moment. Let's deal with Prime Hospitality. And we're going to have MGM buy him from the bank and just merge him in. He's only $300 billion anyway. All right, Genzyme. We don't have anything in biotechnology. Alright, let's go to Enzo. He doesn't have much in the way of cash, but we'll put it on his loan. Now let's go to Prime and liquidate him. Now let's go to Genzyme and see what we're going to do with him. Alright, he's way down here. He's earning a negative rate. Let's just sell him. Okay, back to fast forwarding. Okay, we need to take a look at Devon Energy. He took a loss this quarter, and he's going to take a loss next quarter as well. Let's see if we can figure out what's going on here. We bought him to take some of the pressure off of not T-Com, who was it? Verizon? No, not Verizon. Who is it? Alright, we'll have to come back to Arabian Oil here in a minute. Oh. Okay, my mistake. I thought Devon Energy was a company that we had donated some assets to because we were approaching monopoly status, but that's not the case here. So we have an industry that's growing, and we brought him over from the oil industry as a shell company because the returns were so good. We just bought new assets, and his management is in bad shape. So we changed the managers and we gave him an R&D rate of 16%. So the losses on him is completely normal. The $1.46 that he earned last year came from the oil and gas industries, so we just need to give him some more time for that R&D to work. Alright, so back to fast forwarding. So when we got done with Devon, I came over here and took a look at Arab. And it looks like he's ready to sell. His stock price is 110, and our target for him is 104. So he's above that and he's ready to sell. There aren't any reasonably priced and public companies to buy to re-enter this industry. And I absolutely want to re-enter it because the temporary growth rate is 21% and the returns are phenomenal. So what I want to do is I want to sell Arab and then buy new assets equal to about 20% of the industry. Okay, and he's got $500 million and he has a 25% share. So we're going to buy a new company and give him $600 billion and have him buy $500 billion worth of assets in this industry. Now what will happen when we do that is the returns will go down, and hopefully some of these companies will become affordable and we can merge with them to give us more of a 30%, 35% market share. Okay, but that may or may not happen, but we'll try. Okay, and with the growth rate at 22%, whatever the reduction in pre-tax returns, we should get it back pretty quickly. So we're going to sell Arab the same way we did Royal Dutch and Nippon Telephone and Telegraph back in episode 10. We're going to sell 80% of him, then have him do an extraordinary dividend for the majority of his cash, and then we're going to sell 1% of the remaining 20% that we own, so that we still have a 19% ownership in him. And we're going to give that 19% to the new company. Okay, so let me change my settings to 1 while I do all this. Alright, so first we're going to search for a company. Alright, so we want it to have a low price and be between 5 and 100. Well, there's only 3, so we can just stop right there. Or not. Let's see. 5 and 100. And is publicly traded. Alright, let's try 200. Alright, we're down to 1. ZDNet. Okay, he's worth 140 and virtually no markup. Okay, so alright, somebody owns 80% of him, but we can probably buy him out. We don't care how much of a markup we pay. Alright, so let's have Zurich buy ZDNet. And we're going to offer 30%. Okay. Now, let's quickly have Southern Copper pay down his loan, but nothing else that we need to do with it. Okay, we can pay off the loan and buy back the bonds. Okay, getting back to ZDNet. We can have AOL buy his assets, his existing assets. Looks like there's other assets here to buy. Okay, now ZDNet doesn't have anything but a loan now. He's an empty shell company. And we may have to give Zurich some cash so that he can contribute 500 billion to him, or 600 billion, excuse me. So Zurich is my company, so I'm going to give him 400 billion. Okay, and now we're going to have Zurich give ZDNet 600 billion. And now we're going to have ZDNet buy new assets right after we split it. Okay. All right, there's some assets for sale, so we'll go ahead and buy those first. Okay. Now, we have management that is grossly competent. And we've got a negative return. So we're going to leave this at 0, and we're going to make this 21%. And we're going to change the managers. Alright, now let's have Zurich sell Arabian. We're going to sell 80% of him. Okay, and now we'll have Arab do a extraordinary dividend. For the full amount. And now Zurich will sell 1 more percent so that he no longer has control. And now he'll contribute that 19% to ZDNet. Now, ZDNet is making, or is projected to make, income, but I'm not going to give it a dividend until we're sure that this is based on what he's supposed to be earning in the oil industry, because if this is still based off of what he had in the internet service provider industry, then this will end up being negative once it's refigured at the end of the month. Okay, so we'll wait until February 1st to decide whether or not to give him a dividend. Alright, so now we have a 20% market share, and of course we're negative, but that's going to change. and hopefully the prices on these stocks will come down so we can expand our presence a little bit. Okay, and this growth rate on the demand is really going to help us. Okay, that's all we need to do for there for right now. So we'll go back to fast forwarding. Goodrich is losing money, so let's go see what we can do to help him out there. He's got a 9% share and grossly incompetent. So we need to change his management, and we need to increase his R&D to 21. So let's change managers. Okay, and increase his R&D to 21. And his debt situation is fine. And as long as we're losing money, let's eliminate the dividend. Okay. That's it until we find out whether that change of management is going to help us or hurt us further. If it doesn't work, then we'll do a restructuring. Corn is almost up to 9, and silver has gone back up again. And the index is going like crazy. Alright, Sumitomo is an increase. But let's look at the graph. See, right about here was where the announcement about the ending trade war. Or no, I guess it was over here, wasn't it? It was like in November, wasn't it? Somewhere over here. So he's just gone way up. Alright, so let's go look at Sumitomo. Earnings projected to go up. We'll just pay down the loan. Okay, so just going to fast forward unless corn gets up to 9. And turnaround is occurring under Devon. That's good news. Alright, so I'll be back when there's something more to talk about. Alright, Benetton went bankrupt, so let's go over to him and see what we need to do. And Dow we'll check on in a minute because his earnings have flattened out. Alright, so Benetton, returns aren't that great. It's a negative growth rate on the demand, and returns are not that fantastic, so I think we'll just let him go. Alright, who was it that declared? A second ago? Because I can't remember who it was. Whoever it was, their earnings had flattened out. It was Dow, right? Okay, so That's all right. They're going up. So let's pay down the loan if there is one. All right. Turn the ticker back on. We're going to short. Actually, we're going to short corn first. So let's short corn. Gold is starting to flatten out, so I'm going to go ahead and cover my positions there too. All right, so we need to pay, or I need to pay, 182 billion in tax. And Bayer has gone bankrupt. He's in pharmaceuticals, I believe. Yep. We haven't looked at this industry in a while. Be interesting to see if there's companies to be taken over and whether or not it's worth it. So it looks like there's a lot. I think that's Pfizer and Bristol Myers Squibb, Eli Lilly, Novartis, I forget what this is, Sanofi something or other. Let's add this up. So that's 21, 30. We'd probably want to stop there. He's very capable. What about Bristol Myers? Reasonably competent. All right, 16 billion here. And 51 billion there. That sounds like a winner to me. All right, so let's have Zurich buy these two companies, merge them, get their debt under control, and the situation is improving, and we'll probably want to improve it some more. All right, so let's do that. Zurich has plenty of cash from when it sold off Arab. So let's buy PFE. Buy BMY. All right, contribute Bristol Myers to Pfizer. Liquidate Bristol Myers. let's get his debt under control. We want it to be 25 billion, so he needs 10. The interest on his bonds is higher than the interest on his loans, so let's do the buy back the bonds first. Okay. So let's see what we need to do management-wise. He's still very capable. And it looks like we have some subsidiaries. Who do we have as a subsidiary? Oh, we still have Bayer to deal with. Okay. Let's just buy him and Lenovo will look at you in a minute. Alright, so we need to give him 7 billion or 6 billion. 6 billion more. Okay. And we're very capable. Industry's improving and we're making money, but we're not making that much. Okay, so normally we would set the dividend to 27 cents, but we're only bringing in 36. So I'm going to set the dividend to 9 cents. And let's go see what we need to make the growth rate and whatnot. Alright, we got to look at Microsoft. Alright, so -4, and that's fine, but we need to up our R&D. Let's make it 11%. Well, actually, we're already very capable. So -4 is fine. We need to slim down. The entire industry needs to slim down. And this right here is going to help increase our returns. The other thing we could do is we could buy another one of these, like for instance, Eli Lilly. Increase our market share to 40% and then grow -10 until we're down to 35. I like that idea. Let's do that. Because that'll get us to a better return quicker, while still giving us a significant market share on the other side. Alright, so we again need to give him some more money. It's not 4-1, so we need to give him, let's see, we want this to be 31 billion. Well, that's what it is. Is that 3-1? Oh yeah, it is. It is 3-1. Alright, well, we're getting a discount on our bonds, so let's buy those back. Wow, okay. Alright, so let's see. Still very capable. We now have a 39% market share. Let's make our growth rate -10. News Corporation's up. Okay, so -10. 7's fine because we're capable. And our dividend, is it still 9 cents? It is, but our projection went down. I think we'll just leave it there for right now. Let's eliminate swaps. Okay, and I think we need to check Zurich and make sure he doesn't have any swaps. Yep. Who else did we buy after we did the swaps? Devin? Nope. I guess that's it. Or ZDNet. Okay. Alright, so let's go back to Pfizer. Alright, that's good. I guess that's all we need to do here. Except to give it some time. We can back his R&D down to 6%. But outside of that, I don't think we want to do anything else. Alright, let's look at all these companies that we missed. Microsoft. His earnings were going down. It's reasonably competent. 10% bonds and 10.25% on loan, and it's headed down. So let's get the bonds back. Now let's see if we can figure out why he's not earning as much. Okay, this dropped and everybody increased their growth rate. I don't think we froze anybody here. Or maybe we did. He's frozen. Yeah, okay, we did freeze him. Well, they're growing awful high for having no loan or no credit. I guess it's just because of the high returns. Alright, Microsoft has a reasonable no, he's mediocre. Alright, let's increase the R&D to 16%. And that would explain why his earnings are going down. But we'll get that back once our management's reformed. Okay, so we are reasonably competent. We just need to move up one more rung on the ladder. Alright, let's go look at Verizon. Put that toward his loan. Same thing here. Alright, FEMSA's filing for antitrust against Coca-Cola. These are all just coming fast and furious. But it's a lot easier now that we don't have to do a whole lot for them. Alright, I don't remember what some of the other ones were that we needed to go look at, so I guess we're just going to wait until they declare again. Because I just don't remember who they were. It's one of the perils of having 40 whatever of them. How many are we up to now? 45. Alright. I sold it short at 9 and now it's up to 10. We sold it short at 10 and now it's up to 11. Him we don't have any of, him that we don't have any of, and gold we sold off. So let's check. Yeah, that's fine. When I started to do corn, I had Dow selected and I sold short some corn. So I immediately covered it. I think he made a profit on it. Our net worth is up to 60 billion. I wonder what STI is trading at now. 266. That's what he was at his high point, I think. Wow, he got all the way up to 311. Guess I need to pay more attention. Alright, so we got a lot of cash again. Interest rate is still high. Let's see what the bonds are still selling for. They've come down, but not enough. They're still above 100. So let's put some of that money to work. And we really don't have anywhere to put it except down here in consumer loans and mortgages, where we only make 5%, but that's better than anywhere else that we can put it, namely leaving it as cash. So let's buy $1 trillion in consumer loans. Or well, let's make it 750 billion. And 750 in prime mortgages. Alright, Union Camp is up. Put that money towards our loan. And I think what we'll do is when we get to March 1st, we'll just go down the list and see who's ready to sell, because we haven't been checking. Alright, we still have 2 trillion in cash. It's really kind of too much, but what else are we going to do with it? Okay, let's turn the ticker back on. Okay, while the returns are still good on Hormel and Rambus, and they're really good on Rambus, we got a problem that we need to address here. This industry needs to be reformed because these returns are too low, and we're growing at -10, so the industry's trying to improve, but these two are growing too fast. And this guy's growing too fast too, but these are the primary offenders. So I want to reduce or eliminate their credit so that they can't do this, because they have A credit ratings. So they got a lot of money that they can keep throwing at this, and it'll drive down our earnings. Now it's helping us in terms of reducing our overall market share, but they're just going to kill the returns. And we need Rambus to get up to like 120% of his net worth to stock price so that we can sell him off and then grow ourselves. But that won't happen if these guys keep doing this. So I'm going to go to SunTrust and freeze. This is Nestle and General Mills. And who was that other guy? We'll go ahead and freeze him as well, just for good measure. Goldman's up. That's good. Oh, that's us. Okay, never mind then. I need to pay more attention. All right, let's go to Goldman and pay off his loan. All right, fast forwarding again. All right, we've made it to March, so let's take care of Siemens, and then we'll go through and see who's ready to sell. And the first one that I know is ready to sell is Enzo. We wanted to sell him off as soon as he was above, the breaking even point, and we can sell him off and then grow ourselves. We have a fantastic return rate in here now. And if we sell him off, we've got room to grow. So let's have Siemens sell Enzo. Okay. Now we don't need to keep all this cash. We can do an extraordinary dividend. We're going to do it for 70 billion. And now let's change our growth rate to 1. Okay, we just don't need to grow negative. The demand rate is 0% right now. Okay, that's good enough. So we just need to grow from where we are. Alright, so what I'm going to do is I'm going to pause the ticker. And we're just going to go down the stocks one by one. Alright, so I'm going to fast forward until I find one that's ready to buy, or ready to sell, excuse me. And when we do, we need to change this one. Just mark him red. When I find one, I'll stop and we'll talk about it. So I'll be right back. Alright, we've been interrupted by a message that FEMSA Bottling's antitrust suit is about to begin. And we lost. And that's bad news for FEMSA because he wasn't very large. So that puts him in terrible shape. So I think we'll just have Hartford sell him. Unless we can merge him with somebody else bigger. But there isn't anybody. So we'll just let him go. Alright, so let's go back down the list. And I'll come back when I find somebody that's above their sale price. Browning Ferris, by the way, was real close. He was at 470, so we're definitely going to be selling him soon, but he's just not there yet. So alright, Mazda's above his sale target price. He's at 361. Our target for him is 297. So let's look at selling him. Just going to verify that my calculation's correct and that we've got 5 times our investment here. Okay, close to 6 actually. So let's look and see what we can get here as a replacement if we want to have a replacement. And looks like we're going to inherit some in bankruptcies, but the rest that are reasonably priced are corporate owned. So we'll just have Swiss Reinsurance sell off Mazda. And we'll worry about re-entering it when those companies go bankrupt. Alright. So, I'll go back to looking at stocks and I'll come back when there's something to talk about. Okay, so that's all the ones that are ready to sell. And I think we're going to end the episode here. We didn't have as much success with shorting corn and then buying it and then shorting it and buying it. Its period of high variance appears to be over. So we'll just wait for it to go back down and we'll cover our positions. Spot wheat went down just a tiny bit. Gold is holding steady. Crude is holding steady. Silver is just between 18 and 21. Not doing much. Our interest rate seems to be holding between 8.5 and 9. But that's fine because we've got interest rate swaps at 11.23. So we're making money. And despite our spike to 60 trillion, we're back down to 45. But when the earnings report comes out for April, I think we'll be back up in the 60s again. So come back next time and see how well we do. So until then, if you enjoyed the episode, please like and share, and have a good one.